Hi, my name is Tony McLaughlin, and I'm talking to John Jackson from the Bank of England. John, thank you very much for joining us.
Oh, thanks very much, Tony.
Hey, John, tell us a little bit about your work at the bank and in particular about the RTGS renewal program.
Yeah, so my job title is the policy and product lead for the RTGS renewal program. Maybe I should start by explaining what RTGS is,
Yes.
and then why we're renewing it. So RTGS, it stands for real-time gross settlement. It refers to this type of wholesale payment system that's typically operated by central banks, which is basically a way of people making payments to each other across our balance sheet. So it's an accounting platform that allows people to send in payments, and each payment settles instantly, so in real time, and gross, which means it settles payment by payment. That payment settles by itself. It doesn't wait for any other payments to happen at the same time necessarily. And we've been operating that system for about 25 years. And about 20 years into operation in 2016, we decided it was time to check whether it needed to be renewed. Like any IT system, 20 years is quite old.
Absolutely. And just to kind of clarify why RTGS is special, one of the benefits that RTGS payments enjoy is settlement finality. Can you just explain what settlement finality means?
And so there's a set of legislative rules in Europe, it's settlement finality rules that carve out anything that's happened in that payment system and say, once that's happened, it's carved out from bankruptcy proceedings.
Indeed. And that special significance enables very useful use cases like the settlement of FX transactions, the settlement of securities transactions with a high degree of certainty.
Yeah. The key thing with payments is you're always doing something else alongside the payment, whether it's another payment or you're moving an asset somewhere or whatever. You don't just make a payment for the sake of it kind of thing. And when the amounts get big, you absolutely want to know that there's no chance that will get reversed. So you feel comfortable moving the other asset. So as you say, in FX transaction, you might have two huge payments in two different currencies in two different systems. You absolutely don't want to sort of pay your end away and not be sure that you've received the other end at the same time, or you're guaranteed to receive the other end, or once you receive the other end, you're not going to have it taken back off you again. And so what happens now is that basically most electronic payments, like the high 90% of electronic payments in sterling, all go across this RTGS system at some point in their journey.
Even if they are low value payments which have been netted, the net settlements end up going through the RTGS system. And so after a period of time, the technology gets long in the tooth, the hardware and the software, but also the world has changed dramatically. So these forces in terms of having to upgrade the technology, but also a very changed market environment, led to the project to renew the RTGS system.
That's right. Yeah, we'd had a couple of previous times where we'd taken a look at the system and thought, technologically, does this need to be upgraded? And come to the conclusion that although there were newer technologies were available, it was quite a big investment to make for something that was fundamentally sound. When we took a look again in 2016, what we did is we just kind of went out there and tried to interview all the key people in sterling payments, kind of the participants and academics and the kind of businesses that are end customers and consultants and, the whole range of people. The message just came so much stronger than previous times to say, forget about whether you need to upgrade it technologically. You need to upgrade the functionality of this, because what we, your customers, are doing is, and what we want to do is very different to what we wanted to do 5-10 years ago. So that sort of set of functionality you've been giving us, isn't enough anymore. You need to innovate, you need to improve. And so at that point, you've got a really strong case to change, because you're not going to be able to make that kind of fundamental change on an old platform.
So let's think about some of those elements of functionality that may need to change. I mean, maybe the first one is the modern digital economy is always on 24/7 by 365, but the RTGS system is not. So is that one of the things that will be addressed, the opening hours of the currency, essentially?
Absolutely. It's an interesting one because there were two messages at once. There was one message which was absolutely, if you're investing in any modern system now, it's got to be 24/7 because that's clearly where the world is going. But then at the same time, the message was, but this system is only useful when we're available to use it, we, the payment providers and the wider financial system.
Yes.
So you've got to build in the capability to get to 24/7, but that doesn't mean you switch it on from day one. Yes. Because the constraints that we face with our architecture of being able to go 24/7, the fact that there's all sorts of processes that need to happen offline and the system has to be off before they can happen, they exist in every major bank system as well.
You do.
And so it's as much as anything an investment in giving a clear signal to the market that 24/7 is the direction of travel, and we will be ready to get there when you're ready to get there.
Of course. I mean, because most banking systems are still built upon batch-based systems. We have end of days and cut-off times when we close the books and then do interest calculations and statement production, for example. So, but again, that's out of kilter with the 21st century, where again e-commerce is operating on an always-on basis. So let's also think about other aspects that you may want to change. One of the biggest, if you like, trends has been the adoption of clearing systems with ISO 20022. So presumably the next version of CHAPS will be ISO 20022.
That's right. Yes. And again, when we went out to talk to banks, we'd had previous experience of saying, should we move to ISO 20022? And there was kind of a sort of feeling of, that's a very big investment. We don't feel ready. And then this time it was a very clear signal of that must happen. We see at the time it was very much recently New York Fed, ECB in particular had announced their plans to get to ISO 20022. Yes. And there was a real feeling that a tipping point was being reached. And it was going to be essential for the UK to kind of keep up with that and harmonize with that.
Yes.
And then when we went and started to sort of, it was a clear signal that we needed to move to ISO 20022. When we then started to have the discussions of why and what do you want to get out of it, there's a really deep, interesting story underneath there about sort of richer data, more data-focused business models, about the fact that people wanted to build systems that could be replicated from place to place, so they weren't having to build all sorts of special stuff just for the UK because we used a different standard, but they wanted, they wanted this ability to replicate their processes across multiple countries. So there was all sorts of stuff there.
So also you talk about the data aspects, and ISO 20022 is much richer from a data perspective, but also another modern trend is the uptake of APIs. So again, what part do APIs play in next generation RTGS?
Yeah. All these things are sitting around this sort of central concept that what people want to do is get away from this mix of some digital and some manual processes, and they want to get fully digital. And it's good that you asked me the question straight after the ISO question, because they fit in. It's, as you say, ISO is about getting richer data in, and then API is about getting richer data back out, if you know what I mean, feeding it back through.
And you mentioned the participants. I mean, that's another point of potential change, right? Is the access requirements. I mean, previously it was only banks that had access to the RTGS system, and then everyone else had to interface with the banks. But recently, the topic of access to RTGS from regulated non-banks or fintechs, if you want to call them that, has developed quite rapidly. So what are your thoughts in terms of access requirements to RTGS?
Yeah, this was basically our first deliverable of the RTGS renewal program. We kind of kicked it off as a major technology change, but then fairly quickly became apparent that there was an opportunity to make some changes without changing any functionality at all. It was just making the existing functionality available to a new set of players.
Yeah.
So back in the middle of 2016, we made an announcement that in principle we wanted to let certain regulated non-banks in.
Yeah.
And then we spent the next year kind of working through the practicalities of making that happen. The first non-bank joined RTGS in early 2018, and we've had quite a few through the door since then. And there were sort of a couple of reasons why we did that and why we felt that was a warranted change. The first was that we could see a really vibrant, growing non-bank payment sector in the UK,
yes.
and one which was seemed to be driving quite a lot of innovation, particularly in retail payments, but also increasingly kind of payments for corporate customers as well.
For sure.
But they came to us with a pretty convincing story that without the ability to get access to RTGS, they couldn't become direct members of the key payment systems in the UK, particularly faster payments, but also chaps and backs.
Yeah.
And that put them at a competitive disadvantage, and that placed some kind of limits on their growth. And so we had to spend a year or so just assuring ourselves that we could meet that need without taking on new risks that weren't, properly covered in the system, without risking the whole system. We had to make a number of legislative changes to the way settlement finality works, and also the way kind of the safeguarding rules for these firms work. But we were able eventually to make those changes and bring those firms in. And it's been quite influential, I think, in other people's thinking around the world. There's a number of central banks now thinking along the same lines, and we've seen the Swiss opening up to non-banks as well. And
absolutely.
And I think it's all part of trying to modernize payments and get away from all the payments flowing through these large universal banks like Citi, still play a really important role, but trying to break up the value chain and let more players in and let people in who can target particular markets and sort of, enable people to get payment services without also getting lending services. It's sort of
encourage competition.
Yeah, exactly. Let new business models flourish.
Now, one of the more intriguing, if you like, new functionalities that I read about that you're looking into is, payment synchronization, or some people might call it if and only if settlement. Other people might call it atomic settlement.
Yeah.
And really, this is the concept of the RTGS supporting essentially a conditional payment. So the payment will execute with finality, but only based upon certain conditions being met. Can you tell us a little bit more about that and where your thinking is?
Yeah. So one of the really interesting developments in the last few years has been a kind of lot more appetite from technology companies to try and get into the kind of asset settlement kind of world, using some of these, not always using this technology, but prompted by things like blockchain technology. And there, basically the push is to try and tokenize more physical assets and make them easier to trade, clear and settle. As we saw that trend developing in 2016, it reminded us of something we've been doing in RTGS for 20 years, which is supporting CREST, supporting securities settlement in the UK.
Yes.
Where again, electronic settlement came in there because securities were dematerialized and effective. It was called dematerialized in those days, but it's the same as tokenization. And we've got a very specific interface where CREST can interface with central bank money, and the movement of securities and the movement of cash can happen.
Yes.
And I think the thought was, it wouldn't be the right approach to try and spin up specific bespoke arrangements for every new player that came along, because that worked because Crest settles hundreds of billions a day. We could do something very kind of high maintenance there, but it was to try and find a more flexible interface for, say in a few years' time there are 5 or 10 different outfits who are all offering sort of some kind of tokenized settlement in a particular niche. And so, as you say, we came up with this. Well, what's the minimum thing we need to do to let that happen? And we thought it's as you say, to let our accounts be available to a kind of synchronization operator who would act as the middleman, would not hold any money themselves, but would be able to instruct the movement of cash balances on our accounts, as well as instruct the movement of another asset balance on another ledger somewhere. And the point is, if you can control the release of cash in a way where you first say, is the cash there? Can I reserve it? Can I set it up just for this transaction and it won't move anywhere? Do the same on the other asset ledger and then release them simultaneously. You get this synchronized settlement, which reduces risk, reduces liquidity, can potentially speed things up.
So that's a very interesting insight. And so what essentially you're doing is you already had a bespoke solution for DVP, delivery versus payments, between Crest and Chaps. And essentially what you're trying to do is to generalize that synchronization functionality. And that would be very useful. For example, synchronizing, you could do it for payment versus payment across RTGS systems. You could do it into DLT systems or any other kind of clearing venue with dematerialized assets, which is interesting because I often hear this argument that if securities are going to tokenize, then you need to have tokenized cash. But actually this synchronization function that you're building would enable DVP, PVP between your next generation RTGS and even a DLT system without tokenizing the cash.
That's right. I think it's saying we're still an account-based system rather than a token-based system. Yes. But this two-stage commit process, you have essentially kind of tokenize a small bit of that account balance.
Yes.
For the period you need to tokenize it for.
Yeah.
You sort of set it aside and earmark it, and then you move it. But the nice thing is you haven't had to take all your other balances out of RTGS where you're holding it to meet all your other obligations.
Absolutely.
It's sat in there, and then you just earmark the bit you need, and then you settle it. So I'm with you, Tony, that there's nothing wrong with the tokenization solution, but we think account-based ledgers can interact with token-based ledgers.
I think it's a very important insight, and long live double entry bookkeeping is what I say. And just kind of like moving on now, because what role do you think the modernized RTGS system might play in another kind of hot topic area, which is, and I know you've done a lot of work on this personally, also the modernization of cross-border payments. So does a next generation Chaps RTGS system in the UK is it a piece in the puzzle for fixing cross-border?
Yes, I think so. I think all the things we've talked about that want to happen in payments generally, especially want to happen in cross-border payments, because all the difficulties of having kind of part digital, part manual, quite data poor, quite labor-intensive processes, they're sort of not too bad when it's two people in the same currency, in the same system, in the same time zone. When you then try and have a payment flowing across different time zones, different legal regimes, different language regimes, everything gets more and more complicated. And so the cross-border, it's been known for a long time that cross-border payments is, people are struggling to get the speeds up, struggling to get the costs down, and more of the players who've been kind of intermediating the service are leaving because they can't, make money out of it. And this is something that the G20's got very focused on this year, and the Saudi Arabian presidency made it a kind of key focus.
Yes.
And I've been involved with the bank and with other central banks around the world in writing a kind of series of reports that try and look at the problem of cross-border payments, and think about how we can collectively improve things to kind of get rid of, reduce some of the barriers to entry in cross-border payments, make it faster, make it cheaper, make it more transparent.
Absolutely.
And a lot of the themes are very common with what you've already been asking me about.
Yes.
There's some extra themes because it's cross-border payments. So there's some regulatory harmonization around AML and sanctions and data protection and supervision of cross-border entities. But then there's a lot of operational changes like the 24/7, because, one of the big barriers is you send your payment off and then it gets to another country system and that's closed, and that's an extra 12 hours. And that means you've got money in flight that, is a cost, and you've got greater uncertainty about when things are going to get to places.
Yes.
Similarly, the ISO thing and the getting the better, richer data and the harmonized data. Similarly, the APIs.
Absolutely.
Similarly, and then there are extra things that are operational based, but are kind of in the cross-border space, like enabling central banks to act as kind of liquidity bridges between each other and let liquidity flow, working to try and get existing and new PVP solutions that make those kind of payments more efficient.
Absolutely.
So we're at a point where we've said, let's get down on a piece of paper all the bright ideas that could be done with the existing system to make it better. And now we're in the process of trying to make a roadmap for that and try and kind of commonly commit to just having real concerted effort over the next few years to address some of these problems.
Yeah, that sounds like, and your paper was very good, and I think it identified 19 separate areas. That point you mentioned about almost making the central bank liquidity fungible across venues, across central banks, would be very interesting, because if we've got, $1 billion in the Fed, that doesn't mean we can make 1 penny of payments through CHAPS, because there's no bridge there to, cross that over. So, that's super interesting. I want to ask you, where is the program? What stage are you at? You said that you've been on this road for a little while now. When will we see the next generation RTGS in operation?
Yeah. So I'm just looking around for bits of wood to touch now, Tony. We've just announced in the last week that we've found our kind of technical delivery partner for the build phase, which is Accenture.
I saw that.
And our hope is that we will start to deliver new functionality. Or, as I said, we've already delivered some things like the access changes and some fairly simple changes. And then the bulk of it comes in 2023, hopefully, where we'll completely replace the old ledger with a new ledger, which, as you can imagine, is something that you don't do lightly, and is going to there's going to be a few nervous moments in there. But the key point to make is that's just really buying us the license to trade. That's getting us onto a modern platform where, as change comes along, we can start to meet it. We've identified things you've talked about, which are some of the improvements we want to make out of the box. But the hope is this puts us in a new, much more agile, much more customer-focused place whereas, new things happen which we can't even imagine now. New changes come along that are just starting off in the pipeline. We're able to adapt to those as well.
Absolutely. And, without getting too philosophical about it, I kind of like grew up through banking, and I used to, the term high value clearing was kind of synonymous with CHAPS, and low value clearing was synonymous with ACH transactions. But if you think about it these days, with technology not being a limiting factor, why do we need a separate RTGS, a separate ACH, a separate faster payment scheme? Why not have a single infrastructure that does credit transfers of any value? That must be technically possible.
I think it's probably technically possible. I think the sense I have, but I can't prove this, is that it's technically possible, but not necessarily technically desirable, just because there is still a horses for courses thing here, in that you will architect things differently if you want to get millions and millions of low value transactions pushed through, with speed being the essence, and kind of you're in an environment where actually the level of risk per transaction is relatively low. I mean, fraud and those things are important, but the level of financial stability risk is low per transaction, versus these very high value payments where integrity is key. And also, I think some of these value added functions we're talking about, like things like synchronization or kind of collateral management improvements, things like that, they matter a lot for that system, but they don't matter a lot for the other system. So it feels to me like it's not impossible to do it the other way, but it feels to us a fairly stable equilibrium, that we focus on the high value end, and providing the end settlement of the low value end, and the low value focuses on the things that aren't as natural for us, about just getting things through as fast and as responsively as possible.
Absolutely. Well, it would certainly be a brave decision to try to architect one payment system that ruled them all. That would be quite the leap. So
that's right. We're we've got enough on our plate trying to make this work better, and that was a clear message we got from our participants, actually, of you'll have focus in on what you're doing at the moment. If that works really well, maybe we can look again at that idea of maybe you have created a system we can put more things through, but for now we're just trying to replicate what we do now, but in a much more value added, enhanced way.
Make it better. So John, I think that's been a really comprehensive overview of RTGS renewal in the UK. And again, the UK is very influential in terms of the direction in which other central banks tend to go, because we tend to generate consensus around some of these development paths, and RTGS is foundational. So that's been a great insight into the foundation of the payment systems. I'd just like to hear your reflections finally on the impact of COVID. Everyone says we're going to have a more digital society going forward. I mean, I hate to think what's going to happen if there's a solar flare that wipes out all of this digital infrastructure, but digital payments seem to have certainly accelerated in this in this period. So, from your perspective and from the bank's perspective, how has the agenda changed as a result of COVID, and what are your reflections in terms of what you'll be focusing on when we emerge from this period?
I've seen various of your interviews before, and I don't necessarily have something to add that some of your other people haven't said. I would say that it's that thing of, I think it just emphasizes the trends.
Accelerates them.
It accelerates them. It just emphasizes that wherever you've got things that need people to be in a certain place at a certain time to do them, that's not always possible, and you need kind of to be flexible against that, and you need to automate things as much as possible, and you need to just build resilience into your systems by being as technologically flexible as you can.
Absolutely. Well, if there's one thing for sure as a lesson from this crisis, it's been the absolutely essential role that central banks, play in getting us through times of enormous, economic and societal stress. So thank you very much for that, and thank you very much, John, for giving us this fantastic insight into RTGS renewal in the UK.
Tony, thanks for giving me the opportunity, and thanks for doing these talks. I think it's really great that you're, innovating off the back of a necessity, and you're finding a new way to get your story out and meet people and find out more about payments. And really glad to take part.
Thank you, John. It's been a pleasure.